All right, good morning. Welcome back here to Trader Money. Great to have you aboard. New challenge kicking off here today. Excited about that, and hopefully we'll get a few setups here today. Looking at some of the morning action, there could be one here early on with something like an Nvidia or perhaps some of the banks, though the overall gap in the banks isn't set to put it in a technical spot that I find convincing on a daily chart, though on an hourly chart is curious, right? Market is set to open up about 9 points higher right here, and you think, oh well, 9 points, okay, gapping up, great, fine. What's that mean? Do we see a rally? Well, keep in mind where we're gapping up to. We're just gapping up to basically where the market was an hour and a half before the close yesterday. And so we're not talking about a gap up that's taking the market into any sort of different area here overall. It's not taking it that far out of an oversold condition. It's not really moving it too far away from closer to recent highs or recent lows. It is pretty much leaving the market kind of smack dab in the middle. And here's an hourly chart of S&P futures, and you can see what this looks like. It's a very dangerous gap if it doesn't hold. And we talked yesterday about some of the risk factors that were creeping into the market. And yes, market set to gap up, and okay, probably decent for the bulls. But if the gap doesn't hold, and I'm talking for the broader market overall, we can imply it for a few names out there too, but if the gap doesn't hold, it would create some real short-term, negative elements here from a charting standpoint. But right now, we're set to gap up after a retracement of this kind of Thursday to Tuesday rally from 2 weeks ago, and we came right down to the 62% retracement yesterday, and we're set to kind of gap up into this, so just a little higher than the 50% retracement of that. So from a just pure technical standpoint, we're not talking about the market making a move outside or something where you go, oh, there's a catalyst here and here we go, and it's ready to roll. This is just a kind of a gap of normality with what the chop has been here over the last 2 weeks, and what the consolidation here has been over the last 2 weeks. In fact, if we look at IWM, the small cap ETF, right, and we talked about this yesterday, what does this mean? Well, not a whole lot. That dreaded kind of C word, consolidation, more than anything. And, a little gap up doesn't change consolidation. A little gap down doesn't change consolidation when it comes to it. Ultimately, the consolidation element may come out today, and we could be talking about new emerging trends to the downside or the upside. But for now, we're still talking about 90% of the stocks out there still in a consolidation phase here overall. And generally in a consolidation phase, you want to buy dips, not buy rallies in the morning. And, rallies in the morning, you generally want to sell more than buy. So I'll be interested. It's one of those where I look at some of the banks, like at JP Morgan, and yeah, it's set to gap up a little bit this morning, but nowhere near enough to erase some of the selling here from yesterday. And a lot of this, all you have to do is just go to the front page of any kind of market news, whether it be Market Watch or Bloomberg. It's there's a lot about Turkey, right? And I'll still contend that if Turkey, or if this were earnings season, or if this were any time but the summertime, the whole Turkey thing would be kind of on the back burner. But ECB comments have kind of emerged it or pushed it to the front burner, even though it's been going on for many months. The ECB comments, pushed it to that to the forefront here, as they talked about they used the word contagion, and anytime you hear that, we tend to see some pullback. So we're still kind of in the midst of that. We've talked it's going to probably be a 3-4 day pullback if it's really a short one. Could this morning be a good sign that it's over? Yeah, it could be. Am I convinced? Not yet. But overall, for the challenge, I'll be looking for the next signals to come in. We haven't had a lot of Katie signals, haven't had a lot of trend rider signals here of late because of so many stocks in consolidation. And I do expect that to change, and hopefully change sooner than later. We talked yesterday about some of the stocks that I'm watching or on my watch list for this current challenge. And, that video did not post to the feed yesterday. There was a feed issue there, as most of you are aware. It has been rectified, and I will post it here today so that you can check that out if you would like there. So that'll be there. But things like Chipotle, high on my radar for this current challenge. Things like an Alibaba, things like a Microsoft, some of the bigger names. But we also talked about even just trading the overall market ETFs and how they're going to be a little more tradable given what the option pricing is over the course of, or what I expected to be over the course of this challenge. Now, we did have an earnings report and out of Home Depot. And this was an interesting one to me because, it's one where you kind of heard me talk a little bit bearish about Home Depot fundamentally as some of the margin expansion is slowing. And it's, that's not a reason to go short it yet. It's not a reason to be bearish, with revenues growing the way that they are. But a lot of times when a company is ready to kind of have a longer term top, we do see margins, margin growth start to compress. And that's what we're seeing here in Home Depot. Now, the stock is set to gap up here this morning. Let me put it on the 1-minute chart. You can see it. Stock is set to gap up here this morning about $4, which, given the earnings report, I think is deserved. It's a pretty good one, and one that we saw some of the slowdown that kind of was expected in it. And, maybe not as much as was feared when it came to Home Depot. I still have a little more digging to do. We still have the call, the conference call for Home Depot and everything, which is probably kicking off right now. So we'll kind of see how that reacts. But, this is one where I do think if there is some serious margin compression, we could be talking about it. Trading a little lower over the course of this quarter, but overall, a solid number and definitely not something I want to go sell into here this morning. But if it's not able to hold this bounce, here, and we start to see kind of lows roll over, we could be talking about a more serious pullback within the space over the course of the next several weeks here. Okay. So that's just some of the stuff kind of going on here early on this morning. I do have Valero, hold out from the kind of mini challenge from last week. And, Valero sold off pretty sharply into the close yesterday. I do expect that it will gap up here this morning. Energy should be fairly strong this morning. And kind of want to see where that is. This is something where, I would not mind making Valero my first trade of the new challenge if it's able to break yesterday's highs. And, you can see, yes, while it did sell off and ended down 50 cents yesterday, the volumes, pretty much since I got in, the volumes have just been nothing. And the stock really hasn't gone anywhere, in terms of Valero. That doesn't help my options. But where I am risk-reward wise, I'm holding it, and I'll see what today brings, and we'll continue to discuss it, and we'll jump out at the appropriate time. But if I do see a new entry here with Valero, I will likely close that position and go get it for the new 100K challenge. So that's what I'm kind of looking at. There. Okay. All right, so a little later on today, you'll see posted a video talking about this upcoming challenge, some of the stocks I'm watching, some of the things that I expect are different categories of stocks that I'm looking at to trade here throughout the course of this challenge, and but mostly here today, I'll just kind of be watching things and waiting for some of my signals to come in. I always like to put a trade on the first day of the challenge, but we'll definitely dictate, or the signals will definitely dictate whether or not I do that. Ideally, I'd like to buy a Katie signal. And, I do think there could be a few that emerge here, today, even this week. But, it has been a ghost town here of late. Walmart, last but not least, Walmart here, a little bit of sell day yesterday, set to gap up here this morning. Here we are at 90. It's not something that I could trade right now for the challenge because of the options and the way they're priced ahead of earnings here. So I basically would have to play earnings. And, Tom, I know you asked about Walmart, but yesterday, and, yes, I like it. I like it higher. In fact, I do think there's an interesting chance that earnings drive this thing up into the upper 90s. But, it's something that I can't play at the beginning of a challenge here with those option prices. Okay. Alrighty. Well, thanks for hopping on. If you have any questions, any concerns, let us know, and we will talk to you later. Take care.